I'm Greg Hunter. Welcome to USAWatchdog.com. With us, a man who calls himself a forensic macroeconomic analyst. He's just a smart guy in my book. He is Rob Kirby from Kirby Analytics. Rob Kirby, thanks for joining us today on USAWatchdog.com.
Pleasure to be with you again, Greg.
You said something in the pre-interview. I want to make sure I attribute this to you about what is going on in the markets. Everybody thinks that everything is going nowhere. It's flat. They're buying the dips and all that. And you have a different view. You're looking at cryptocurrencies, and you just told me that cryptocurrencies are the rejection of the dollar. Would you explain that for us?
Yes, well, specifically what I said, Greg, was the rise of the cryptocurrencies is de facto the rejection or an expression of the rejection of the U.S. dollar as a store of value in international markets. To back that statement up, I would only point to the four largest cryptocurrencies by market capitalization and what they've done in the last 3 months. And to most viewers, listeners, they would equate, most of the people would equate to Bitcoin, which seems to get most of the press. And good reason it does get most of the press. It is the largest cryptocurrency by market capitalization at around a $34 billion market cap. And to give you an idea, that $34 billion market cap has doubled in the last 3 months. So let's just say late February, Bitcoin had a market capitalization of 16 or 17 billion, and it's doubled in 3 months. But let's just say the three cryptocurrencies that are right behind Bitcoin in market capitalization, the next biggest one by market cap at the moment, it's called Ethereum. And Ethereum has gone from a market cap 3 months ago of 1.12 billion to 15.7 billion. So it's up 13 times in 3 months. The next biggest one by market cap, it's called Ripple, currently at a 12.9 billion market cap. And Ripple had a market cap 3 months ago of 205 million. So Ripple has gone up 60 times in the last 3 months. And the next biggest one by market cap, currently at 2.38 billion, is called NEM or NEM. And 3 months ago, it had a market cap of 56.8 billion. And so, 56.8 million to today, 2.38 billion. So it's gone up 20 times in the last 3 months. And to anybody who's paying attention, I would suggest to you that if gold and silver weren't strapped in straitjackets and strapped down on gurneys with the suppressive activities of the central banking community and the Exchange Stabilization Fund in the United States, they too would have probably seen a ratcheting up of anywhere from 10 to 20 times easily in the last 3 months. Because what we're experiencing globally is a rejection of the U.S. dollar. And it's right there in cold, hard numbers if you want to go and look at them. And there's plenty of resources on the internet where you can go and view these cryptocurrencies trading in real time. And you can also see the cryptocurrencies as they trade in real time. They have extremely wide ranges intraday in the values where they trade. As in yesterday, Bitcoin had a trading range of $350. This is just not allowed in the strategic commodities like precious metals, and for that matter, and or the energy complex, whether it's crude oil or natural gas. And in free markets, this is the way things are prone to trade from time to time. And this let's just say this volatility that occurs naturally in free markets when they encounter difficult times or unsure times, and boy, we're sure seeing difficult and unsure times. Political gyrations with a with a terrorist attack in Manchester last night, and we see very, very little reaction in the precious metals, but we see these cryptocurrencies, trading in 10 and 15 and 20% ranges, and most of them, since they're seen as alternatives to the dollar, the movement is primarily to the upside, not the stagnant or downside.
Well, I was just looked at the USD, the Dixie, the US dollar on the Dixie, and with this horrible attack in Manchester, you were telling me that it used to be the dollar would spike, but it's actually gone down slightly since this attack. Is that the continuing what would you call it, the confirmation that the dollar is A, controlled massively, and B, being rejected?
Yes, the dollar is being rejected, Greg, internationally, and your comment hits the nail right on the head. Normally when there's international incidents, historically, there's a spike up in the U.S. dollar index, and we see this terrorist attack occur last night, and lo and behold, the dollar index, it doesn't go up; it actually drifts off a little bit. But on the other hand, the cryptocurrencies have been on wheels up. And of course, gold and silver are still straitjacketed and strapped to the gurney, but that isn't going to last for much longer, because at some point in the near future, the demand for physical metal will trump and overwhelm the suppressive derivative or paper venues where metal is sold that does not exist. You see, and let's be really clear about this, Greg. The big difference between these cryptocurrencies and precious metals is that precious metals have underlying them or surrounding them a derivatives complex where you can sell short precious metal or paper representations of precious metal that does not exist, and that regulators allow market participants to sell literally any amount of metal, whether it exists or not. The cryptocurrencies have no futures markets, they have no options markets, and you cannot sell a cryptocurrency short, meaning that you cannot sell a cryptocurrency you do not own. But in the precious metals market, regulators, and specifically American regulators, allow the big banks that are friendly to the Federal Reserve and the U.S. Treasury, they allow them to sell any amount of paper precious metal, like where, for instance, in the aftermath of the U.S. election, when the surprise candidate Trump won, the initial reaction in the precious metals arena was for them to screech higher in value. But that lasted for a couple hours before the price suppressing machine went into action and sold in a matter of 3 days. 3 times annual global gold production was sold in paper form into the market in 3 days. So this is gold that does not exist. This is gold that never will exist. This is gold that physically is not for sale anywhere in the world, and yet American regulators and British regulators at the London Bullion Market Association allowed this naked selling or naked shorting of gold to suppress its price and bash its value down. And this is done because what regulators and what politicos and central bankers are most concerned about is that people will lose confidence in the dollar as a store of value and the world's reserve currency. But it seems that their determination to hold gold and silver at unrealistic and uneconomic levels has probably boomeranged in their face, because it's this suppression that has given rise to and allowed the cryptocurrencies to flourish. Because necessity is the mother of all invention, and the cryptocurrencies have been developed precisely because precious metals have been held at such unrealistic levels.
This is like a gift. Then I mean, in other words, I'm holding gold and silver down at silver at 17 and gold at 12 something. I mean, this is a huge gift. And plus, if you're holding on to silver and gold coins, when the lights go out, you still have access to your silver and gold coins. You don't with cryptocurrencies.
Well, if let's just say if there's a problem with the electricity grid, or if there's a problem with the internet, whether it's a solar flare or electromagnetic pulse, you wouldn't want to necessarily have too much of your net worth tied up in cryptocurrencies because you might have trouble cashing out or being able to even prove that you own them. So they come with problems too.
But this is a gift. The price suppression is a gift. I want to bring up something that I want you to address directly because you've been on here a couple of times, and this is not a trip up or I'm scolding you or anything like that. But I and everybody else has been amazed at how they have put this off. I mean, through crime, through the rigging of markets, gold and silver. You were the first to say, "Hey, in the next month or so, we're going to have a big bank, which what we now know as Deutsche Bank." But they still didn't seem to suffer anything. Then they were caught again, just the last month or so, rigging the forex market. I mean, the rigging, the crime, the suppression, the naked short selling, you name it. I mean, it's just unbelievable. I mean, we been on the brink several times. You said at one point, we've been on the brink, and it never happened. Is there going to come a time where they're not going to be able to pull us back from the brink? Because some people think they can do this indefinitely. What say you?
Well, something else, Greg, that I have said for very many years, and even on your broadcast, because I think you asked me quite a number of years ago when this would end, and it will end when there is a default in an expected delivery of physical precious metal, because everything else can be papered over. We have been on the brink. My personal view is that in 2008, there were financial institutions and very big ones in America that were insolvent and were technically bankrupt, but they were given waivers where they didn't have to actually adhere to accounting, and were given call it holidays in being accountable and reporting their financial condition accurately, because that law exists in America where designates of the president and the security complex can grant that kind of a waiver. And then what happened in the aftermath of that insolvency episode is that the institutions in question were refinanced via stealth through interest rate derivatives, which were done on a proprietary basis between the secretive arm of the U.S. Treasury, the Exchange Stabilization Fund, and these institutions. These interest rate derivatives that I speak of, they are credit instruments fundamentally, and when you see institutions that are very likely insolvent and very of the very poorest credits in the interbank market, in the middle of a credit freeze, strapping on $8 trillion worth of credit-sensitive interest rate derivatives, it identifies who the counterparty had to have been, because the interbank community wouldn't do that business with an institution that was, highly suspect to being the next domino to fall in the financial universe. So, I guess really to round it out, the Achilles heel of this whole shooting match truly is physical precious metal, because it's the one thing you can't paper over unless you have people that are willing to excuse you from making a physical delivery of metal for a premium, which is expressed in fiat money. And so long as people are willing to take fiat money in lieu of physical metal, the game can continue. But the minute somebody who is due a large chunk of physical metal and the seller cannot supply it, when that occurs, that forces the person who owes the physical metal into the market to purchase it. And that's when this whole thing unravels. because that's when we see an uncontrollable rise in the price of precious metal, much like we have seen in the last 3 months in the cryptocurrencies. So this is in the offing. This will occur. The only question is when it occurs, not if.
And just so people know that you've got deep experience in the derivative markets. I mean, you were on the cutting edge of the implementation of them, inventing them, using them. You worked for big banks, a big bank in Canada. I don't know who was it, Citi?
No, Greg, I was a broker. I was a broker of these instruments.
Yeah.
To the banks that originated them.
In the 80s.
I
love you a long time ago. Yeah.
Yeah.
So just so people know that you have deep experience. When you talk about derivatives, this isn't some like, I'm in my mother's basement reading the internet. You actually were brokering these derivatives. And the derivative complex hasn't gotten any better. I mean, don't we have even more leverage right now? I mean, when this Bill Holter likes to say, and I believe him and I think he's right, when this thing goes, it's going to go fast. I mean, it's going to go global, boom, right around the globe within 24 to 48 hours. I mean, this derivative complex is weak, is it not? Will you talk about that a bit?
Well, actually, the derivatives market, Greg, believe it or not, in the last 2 or 3 years has contracted quite a bit. But all that being said, it's still measured in the hundreds of trillions. It's just that the amount of derivatives that are outstanding has declined for a number of technical reasons. That probably are beyond the time scope that we have here. But let's just say with the advent of the European Central Bank going to direct purchases of assets, and with the at least in my belief, with the U.S. Treasury, the Exchange Stabilization Fund, now memory holding U.S. government bonds that foreigners are selling, that nobody can explain who's really been buying them. It's been my belief that it's dark pools of money contained in the Exchange Stabilization Fund that is buying these bonds and then deep sixing them in the Exchange Stabilization Fund, because they're not showing up in the U.S. Treasury posts on a monthly basis the holdings of all foreign countries and how much U.S. government securities they hold. And when we know factually that America's 3 or 4 largest financiers, whether it's Saudi Arabia, whether it's China or Japan, and when they factually are selling U.S. government debt and not buying any of the new government debt, because the U.S. government continues to still run these massive annual deficits, you've got to ask yourself where the bonds are going, and the bonds are disappearing, and people are getting paid money for the bonds. So nobody's offered me a good explanation as to where the bonds are going, and or where the money's coming from to buy them. And I suspect it's been coming from the dark side, and the U.S. Treasury has a transparent side, which we see expressed as the national debt, which is about 20 trillion. But they have a dark side where the balance, I believe, is maybe as big a balance on the positive side, but they can't even acknowledge that it exists. Because if they did, it would be an acknowledgement that the amount of dollars that really do exist in the world might be double what everyone perceives it to be. So anyway, and that would bring on a hyperinflationary event overnight. So, but there certainly is a dark side to the U.S. Treasury, and I find it humorous to hear some of the mainline prognosticators try to wade into this soup and try to explain that the Exchange Stabilization Fund is something that it isn't. They try to claim that it's transparent, and they try to claim that they publish annual financials, and they really don't. So
they're just secret. It's basically this is a secret of money printing and U.S. Treasury debt buying from foreigners who want to dump it, and we want to make it look like it's not being dumped. Correct?
Yeah, it's a super secret slush fund, Greg, is what it amounts to.
And then the point is to try to make people think that there's demand for our debt, that foreigners are not dumping it. That's the point of it, to make it look like that U.S. is solvent and its bonds are in demand when indeed they're not. They're being dumped at the moment.
Exactly, and it's to make the dollar look strong, and to make the U.S. bond market look liquid, because whenever foreigners want to sell U.S. government bonds, there's always a buyer. Well, when the supposed biggest holders of U.S. government bonds are dumping them wholesale, you got to start scratching your head, wondering, who's the buyer? Who's buying all those bonds? Where are they getting all the dollars to buy all those bonds? And especially, Greg, when we've seen over the last 6 or 8 months, we've seen foreigners dumping U.S. government debt. I mean, the 10-year bond was up around 260 a few months ago. Today it's at 220 or 225. Like it seems to me it doesn't matter how much selling there is. The U.S. government bonds just seem to have a mind of their own, and it doesn't matter how much selling there is. Rates can still rally.
Do you think that this Saudi deal, because all of a sudden they're buying all this military equipment, instead of holding on to the debt, they're thinking, well, listen, we might as well get something for our money. So sure, we'll buy $60 billion, the biggest arms deal ever. Do you think this is them just recycling their money that they're being paid out, and they say, okay, you pay us out, and then we'll buy some arms. We'll at least get something for the dollars that you're paying us back with. Is it, you think that might be something that's happened at this trip that Donald Trump just went on overseas?
Absolutely. I mean, it's no surprise that Trump's first stop on his foreign trip was to Saudi Arabia, and what the real consequence of that truly is probably not being divulged publicly either. But it's most likely got strong undercurrents of deals being worked out behind the curtain as to what degree the Saudis will continue to sell oil in dollars and or hold U.S. government debt. So I'm sure there's been a degree of cup in hand on the part of President Trump dealing with the Sauds, who have issues of their own, but by and large the perpetuation of the U.S. dollar, the petrodollar, the perpetuation of it as the world's reserve currency is underpinned by Saudi support in terms of selling oil in dollars.
And this is why we made this big arms deal. That's what we have to trade. Your security. Well, you need some arms. Iran is in Syria. Iran may take over. That's what they want to do, supposedly. So you're saying that the Saudis are saying, okay, we'll keep selling. You got to arm us. You got to arm us and arm us big time. Basically.
Yeah, and rumor that I've read over the last couple days is that Saudi Arabia was given a huge inducement in terms of a price break on the arms that they purchased, as in a huge discount, and no doubt, because the notion that America promised Saudi Arabia or the royal family protection was a key part of the petrodollar agreement that was negotiated back in the 70s and during the Nixon administration, when Nixon took America off the gold standard. That was coupled with Kissinger going to Saudi Arabia and making a deal that the Saudis would sell oil exclusively in dollars in return for American guarantees of protection for the Saudi royal family and the Kingdom of Saudi Arabia. So yeah, they're very, very connected, and anybody who would tell you that they aren't, I would just say don't listen to them, because they're just not talking reality.
I know you. One of the other things I want to get in this before, I don't want this interview to go too long, but I know you arranged, along with your forensic macro economic analysis, I know you arrange gold by the ton for certain clients of yours. How is that going? Are you being able to find gold by the ton in multiple, whatever, how many ounce bars they would be, 500 ounce, 600 ounce bars, whatever, kilo bars, whatever it is? Are you able to buy gold by the ton for your clients?
The answer to that question, Greg, is it depends where you are in the world. I would suggest to you that the conditions of the market in Asia and on the other side of the pond are a lot tighter than they are here in North America. And the reason for that is largely that it's the Asians, it's the Chinese, it's the Russians, and the other Asian nations that have the voracious appetites for physical precious metal. And the word I get from the other side of the pond in Asia and in Africa too, for that matter, is that the physical gold market is, it was expressed to me that it's as tight as a duck's behind. And he didn't actually use the word behind. In North America, listen, finding anything north of 5 metric tons of gold is a very, very tricky operation in today's world, and finding amounts even less than that in Asia is a very, very tricky thing to do. The coin shops are still well supplied.
But good. I want you to talk about that. The coin shops.
Yeah,
they had a really low number of silver coin sales in the beginning of this year, and it makes people think that, well, it's not very much in demand. But what say you?
Well, what say I is that because the price of silver has been straitjacketed and strapped to a gurney, the price at the demand at retail has been quite low. But you see, it's interesting. I have subscribers from Germany who tell me that when they go to the coin shops in Germany, there are 80 buyers for every seller. So, like I say, it depends. The precious metals market and even the physical precious market is very bifurcated. Gold that comes in a raw form or in doré form out of Africa trades at a discount. Gold that's been gone through the refining process, can and does trade at premiums, or can trade at spot to premiums. And then you get to the coin market, and it trades at healthy premiums over the spot price. So, the job that's been done in the Western media to discredit and to make physical precious metal the investment choice of wonks, has done a lot to dampen demand for physical metal at the retail level in North America, Canada, and the United States. In Europe, where the political scene or geopolitics with the migrant crisis, with civil order breaking down in many jurisdictions across Europe, where they have faced incredible amounts of migrants, they have a different attitude and a different flavor towards physical precious metal, because they also, Germany in particular, they have the history and the taste in their mouths of a currency that has failed before. The German currency, in the 1920s, disintegrated to zero. And you see, people in Germany remember that, because they still have living, a lot of them still have living family members or the memories still in their families of what can happen to a currency when it's mismanaged in a severe form.
And you think that's happening now to the dollar?
I believe it's happening in spades. We can see it happening right in front of our eyes. We see it with the rejection of the U.S. government debt globally, and we're seeing it in the rise of the cryptocurrencies. And and pretty soon we will start to see it in the physical precious metals arena as well.
So the prices for gold and silver are $17 an ounce, plus the commission for silver, and 12 out of 20, 12 whatever it is, plus the commission. You're saying that's a gift? That's a huge.
I think silver is the most underpriced asset on the planet.
Wow, other people have said the same thing. And what are your so you agree this is a gift, a buying opportunity. I don't mean to be, people will say, oh, you're just pushing gold. I don't know what else is out there. Would you buy a bond? Would you buy dollars? I mean, what would you buy? The stock market at 25 times earnings? I don't know. It just sounds all bad to me.
No, I'll take my chances with physical precious metal. It has the history. It has the history. It's tangible, and it's universally accepted. You can take an American silver eagle coin or a Canadian silver maple. You can take it anywhere in the world and get local currency on demand at the advertised price. I cannot take a Canadian $50 or $100 bill and go somewhere in Europe and walk into a store or walk into a shop and get cash. They just won't take it.
One last thing, your sources. You got sources all over the planet. You got you rub shoulders with people that billionaires. And so, if there's anything that you can tell us about some of the things, or one of the things, or a couple of the things that your sources have said that you went about something coming down the pipe, anything at all, you don't have to give us your source or the name or anything like that. What have your sources that you can tell us? What have they been telling you?
I've been hearing that cryptocurrencies are very likely here to stay, as in they're not going away. But in the end, all paper assets, the saying is all paper assets will burn and physical metal will stand tall. And I believe that's stronger today than I ever have.
And your sources have dug in their heels. They have not changed their mindset at all about what is coming.
They're buying all physical precious metal that comes their way.
One last thing, and I hate to give you a time date because I know a lot of people have made predictions. I thought it would go down in 15, but it didn't. But how they put that off, I don't know. David Stockman's been out, and he has said here on USA Watchdog that he thinks that we'll have a crash sometime between August and November of this year. And we just had Steve Mnuchin out, the Treasury Secretary, saying that the new budget is going to stop the bailout of big banks. Zero Hedge said, translation, big banks are going to be bailed out again, that we're going to need big bailouts. But that's what the budget, what's been going on is a huge budget battle. They want to defund Planned Parenthood. They want to build a wall. They want to do all this other stuff. They want to cut taxes here. They want to, it's unbelievable. But my question to you is, David Stockman says August to November. Do you think that's crazy? Do you think they can dodge the bullet again and put this off into 2018 or 2019 or whatever?
I would say the answer to that question the question is best answered by saying pay attention to the rapid ascent in the cryptocurrencies. I would suggest to you that with price increases in the last 3 months in the top 4 cryptocurrencies of an increase of 2 times, an increase of 13 times, an increase of 20 times, and an increase of 60 times, are likely nodding their head in agreement with Mr. Stockman's prognostication that a crisis occurs sooner rather than later. And if we see these cryptocurrencies continue their geometric vector up, it would imply to me that it's very, very near at hand. And frankly, Greg, with what is coming for the U.S. dollar and the U.S. dollar complex, having it timed to the day or the week or the month isn't the big issue. The really big issue is what comes after, because there will come a point where I do believe with the precious metals, and specifically with physical precious metal, there's going to come a point where you either have it or you don't, and if you don't, you won't get any because it won't be available. I have long said that there will come a day when you cannot buy physical precious metal with U.S. dollars. that day is approaching. That will occur. I have absolutely no doubt in my mind that it will occur. And so do you want to have physical metal today while you still can buy it with dollars, or do you want to wait until you can't buy it with dollars and watch your dollars burn? Or you can wipe your bum with your dollars.
Yeah.
So that's what's coming down the pipe. And you can either get your head around it, or you can get run over by it.
Rob Kirby, Kirby-Analytics.com. You also have a subscription service, which you don't pay me to bring this up. I just do it because I like you and I think you're smart. And you also have personal email contact with your subscribers. How much is your subscription service? Where do you sign up for it?
It's $145 a year. You can sign up at Kirby-Analytics.com. That's where I am on the web.
Okay, and I will put the links up for that. Rob Kirby, thanks for joining us today on USAWatchdog.com.
My pleasure, Greg.